Hello, my name is Trevor Walker. I'm president and CEO of Frontier Lithium. Frontier Lithium is a pre-production business advancing the North America's highest grades and one of the largest hard rock spodumene resources located in northwestern Ontario, Great Lakes region in North America.
Trevor, good to see you again. It's been a while, but you've announced that you're going to appoint some partners to start work on the DFS. Tell me a little bit more about that.
Yeah, thanks, Matt. 100%. We're really focused on continuing to move through the milestones, de-risk the project. A couple months ago, we filed a pre-feasibility report. It was really positive. $1.7 billion NPV. And we've gone through quite an extensive process of shortlisting and trying to find the right partners to work with regards to engineering for definitive feasibility. We're looking here, firstly, of course, at spodumene concentrate production. So phase one, mine and mill, 2 stages to ultimately get in the lithium game, produce premium spodumene concentrate from the PAK Lithium Project, with a second stage to follow with regards to the ultimate objectives of the company to create a fully integrated project to produce lithium chemicals.
Right. Okay. So that's the objective, right? I think people looking into this are, I guess, slightly reeling from, lithium prices coming down from their super highs last October down to, much lower rates. So it seems to be rebounding to a more, I don't know, believable level at the moment, obviously. So I think people are wondering, will we see lots more of this toing and froing with lithium price, and what does that do for companies like yourself? I mean, how have you viewed the last 12 months?
There's no doubts that the last 12 months have been extremely tough on junior mining companies, in particular those working on lithium projects. The reality is the chemical pricing still remains impressively high. When you look back 6 years ago or so, lithium carbonate pricing roughly around $4,000 to $5,000 a ton. Long-term contract pricing really between $20,000 and $30,000 a ton right now. So the incumbents are highly profitable. The effects of obviously the softening from the peak of $80,000, $90,000 a ton, not sustainable. It's created quite a frenzy and a lot of money or investments, more predominantly from retail, large retail, small institutional, that came into the space. So in effect, echoing the peak pricing created a bit of a bubble in the space. So that bubble's burst, and it has been a challenge for companies to raise money and advance projects. Historically, when we think about Frontier Lithium, we've gone through. We've actually put the first discovery hole into the project in 2013. Those were the days that were really, really early days. Chemical pricing around $5,000-$6,000. We had a vision of what was going to happen in the future. We got our sights on a project that we thought, had the potential to be large and high grade and be an anchor resource for the Great Lakes region in North America. That's exactly what we've invested in. We remain focused on the long term, despite a few cycles and tons of volatility over the last 10 years. We find ourselves, delivering on what we set out to do, and that is North America's highest grade, one of the largest spodumene conventional lithium resources located in the Great Lakes region. where we see, big investment taking place, construction by some large auto OEMs to both realize cell production, electric vehicle production, in close proximity to our resource. So long term, we're extremely bullish. We were worried about the state of chemical pricing and rising interest rates and recessionary fears. So that's why we did a raise about 11, 12 months ago. We made some really good moves, and we find ourselves with a healthy cash position, well-financed to deliver DFS Phase 1, be focused, mine, mill to produce premium spodumene concentrate, and we're financed to deliver that over the next 12 to 18 months.
Right, so we're kind of clear on you're firming up with the DFS, the economics, right? So you're funded to deliver stage 1 mine and mill DFS. It's a 1.7 billion, NPV8 post-tax. It's a big number. It must be very attractive to industry. People get excited about it. But again, looking at the investor community, do you think that they believe you, company of your size, can actually get that thing funded? What gives you confidence that you're going to be able to get this thing funded?
Look, the money's there. Money's available for high grade, large, conventional resources in strong jurisdictions. Furthermore, in jurisdictions such as Ontario, where we see market failure, to your point, but we see tremendous government support to address that failure as well, to build and stay focused on the long term. So we have no concerns about financing our project. What's really important is stay focused on the steps that are in front of us that we need to continue to deliver on, whereby pendulum swing. And we really perceive the current state of the market as the new floor. So we're really bullish on lithium, on the long term, on our project, and we continue to check those boxes and de-risk. So we have no concerns about financing our project.
Okay, well let's look at but I can probably endorse that slightly in the sense of most battery conferences that we go to, the money is there. It's certainly very much so on the debt side, a lot from the government as well in terms of various incentives, etc. And it's really a question, I guess, the cost of the equity component. So let's look at that first phase, mill and mine, right? Where yes, you've just started a DFS process, but what are the other things that are going on in the background? Because there's conversations with governments which move at a certain pace. There's trying to understand who your clients are going to be, and obviously where and the cost of where the money's coming from and what the cost is. So how are you viewing this phase 1 in terms of things that you need to deliver as a CEO?
Mine and mill is ultimately what addresses where the value proposition lies for the company. It's the focus of attention from offtake, as per your points, and to address that, of course, the appetite is huge for domestic local supply in a given jurisdiction, Ontario being a strong candidate, one of very few globally that has the ability to go from mine to electric vehicle production in close proximity to our resource. Beyond the huge appetite for offtake, I have no concerns about offtake from in the future regarding our project, given the fundamentals and how strong of a resource and management team that we have. We are actively also engaged in conversations around potential partnership for the company at a project level. So we're advancing those conversations to look to participate with the company regarding mine, mill, and future downstream chemical plants. So the third of the stool, of course, that we're not counting on, but we fully expect to see is again that point of non-traditional sources of capital to limit dilution to shareholders, and that's the potential around government. We've seen over close to $30 billion of investment commitments in the province. Government of Ontario and the federal government been very active, averaging 20 to 30% through grants of the capital costs. So what's really key around the critical mineral strategy in the province and in the country is to really bridge the southern manufacturing, building that ecosystem to supply, in our case, supply from the north. So given, again, the fundamentals and how strong the project is, we would hope to expect to see some form of government support in the future regarding lithium chemical production. But there's lots of work to be done. We remain focused on phase one, fundamentally the shortest path to cash generation, de-risking the project, and that is production of premium spodumene concentrates from the PAK Lithium Project.
Right, but
anything beyond that?
Sorry, but what I'm trying to get at is kind of heart of any maybe concerns or challenges that you've got to face, and I'm wondering what you're doing about them. Which is there's a whole bunch of different types of government conversations going on here, which is obviously you've outlined a few today in terms of the types of funding available, but infrastructure for you guys, that's not necessarily a direct capital expenditure cost, you'd hope for you. So in terms of trying to understand what infrastructure government will fund and timing of all of that, I mean, what do those conversations look like? What are you trying to achieve? How do you work together to kind of manage that?
You're right. Key challenge on the project is a lack of all-season road infrastructure. There's a requirement in the long run to see approximately 140 kilometers or so of bridge and road. What's fortunate for ourselves is about 60% of that road is actually fully permitted and just awaits funding for the bottleneck bridge of the Burns River. And again, 60% of the way up. And that's permitted by others, awaits funding. So that's a great opportunity that comes on the heels of the current Wate power line, high voltage transmission line that's currently under construction. We expect to see that energized in 2024. So the indigenous communities in Treaty 5 region proximate to the project are looking towards a future where beyond, being attached to the grid, having the potential for road access. So that's a huge opportunity that we fully conversed with government, and we expect government to do the right thing for the communities and assist in funding on that project. In the meantime, to your point, that control and timeline is really out of the hands of Frontier. What we need to do is continue to advance the project, thereby increasing leverage to assert the importance of infrastructure in the north to government. Being prepared for the worst is always been the way here at Frontier Lithium. And what we need to be focused on, firstly, is spodumene concentrate production. And the plan through definitive feasibility looks at two stages in that definitive feasibility. Stage one would be half of the mill, so the potential to produce up to roughly 100,000 tons of concentrate that operation can be built off of the winter road and operated on the winter road. And again, produce premium concentrates in excess of 6.5% spodumene concentrate grades, whereby and create a profitable scenario for shareholders, de-risk the project, allowing time, because to your point, the biggest question mark is the timing of all-season road access in, whereby the second line in the concentrator to twin and double production for future sales of concentrate and the potential to feed downstream lithium refinery. So we built in, and we're planning for the worst, realizing the probability of realizing road access will likely come into effect at some point, early in construction or early operations. But in the meantime, we need to be prepared and show the profitability potential on not having that. So that's all about keeping the options open, being prepared for the worst, but showing a profitable situation. These are all things that this is how we operate. This allows some further leverage and time. When you bring governments and indigenous communities, multiple stakeholders, and industry, it takes time to work through these things. In the meantime, waiting on government is not a strategy. So we continue to advance the project.
It's not a strategy in terms of timelines, but I think you've started these conversations. I guess what I'm trying to look at is all these kind of barriers to entry, right? Which is, you started these conversations and you've kind of got to go through some phases. I guess, baseline environmental studies being a bare minimum requirement. But what are the things you're having to do and spend time, money, and effort on to kind of sate their desire to make sure that you are doing things the right way?
Yeah, so you're correct. From an environmental perspective, we are well into baseline environmental. That'll be completed by mid-2024. What goes hand in hand with that, of course, is commencement of permitting for mine and mill operations. So those conversations are being had with various government ministries and agencies, as well. Which absolutely critical is working with indigenous communities proximate to the project. Partners of ours been very supportive up until to date on the project. Continue that dialogue and strengthen the partnership to go beyond an exploration agreements into impact benefit agreements. So that those conversations are advancing nicely and very much in line with our objective to complete DFS phase 1 within 18 months and be in a situation where we could have final investment decision and start building a project. So we're firing on all pistons here at Frontier Lithium to deliver firstly spodumene concentrate.
Okay, and so which is great for that phase 1. Just in terms of coming back to the funding component, you said you obviously raised that money just shy of 12 months ago, gets you through to FID. So therefore, when we say that includes the delivery of the baseline environmental study, includes the advanced impact benefit agreement process, and there's nothing else you'll need to raise capital for between now and FID. Is that what you're saying?
Correct. Yeah. With regards to phase 1 mine and mill.
All good then. And with regards to, again, remind me some of the numbers in terms of, I'm trying to again understand the sort of the revenue opportunity, and therefore how I can start to value your company. Obviously, the PFS numbers I think are out there, but you'd be looking to do what with the DFS? Is it just confirmation of how you build the thing, or is there more new data that will enter that, which may change the economics further?
Again, 2 stages built in that we'll be building into the plan. Stage 1 is half of the total production, so that's up to 100,000 tons of concentrate. If we're in a situation for a year or two whereby concentrates need to come out on the existing or upgraded winter road, we see the potential up to 100,000 tons a year. If you look at premium concentrate, it's one of the differentiators from our project from most is the potential to produce really low iron, specifically from the PAK deposit, about 10 million tons of 2% lithium oxide grade, showing us the ability to produce concentrates less than 0.15% total iron oxide. So very, very few resources in the world globally that have that potential. We have the optionality to produce for the industrial market, premium glass makers, historically 2 to 3 times premium over chemical grade concentrate pricing. But again, it's really about where can we maximize revenues and margins. Also, our material is a sweetener. We see it, the production of it's used for lithium refinery elsewhere. At the commencement of our operations, you won't find a cleaner, higher grade concentrate globally than from the PAK Lithium Project. We believe that'll demand a premium. That'll allow a profitable situation. If you carry $2,500 a ton, for example, at 100,000 tons, that's revenue base of $250 million US dollars per annum. So very healthy revenue. We would expect that the payback pretty short on that. Be prepared for that. As we continue to advance, we expect things such as offtake, potential partnership, and see a lot more advancement with regards to governments and further investment beyond power into the region, all for ultimately so Frontier can de-reduce concentrate and step downstream in the future for lithium chemical production for those customers that are setting shop up in the northern U.S. and southern Ontario right now.
It's kind of interesting time when you give us those sorts of numbers, you kind of think, well, actually, you probably could do this yourself. But strategically, in terms of lithium chemical refinery production, I know you've got some technical expertise in-house. Will it be better for you? Would you be more likely to bring in a strategic partner to help on that side of things? What does that do to you in terms of like first mover advantage and the speed at which you need to get into market?
Yeah, the demand is, despite what we're feeling in equity markets right now, the demand is huge. We are front and center for interest from global OEMs and those requiring, spodumene concentrate and chemicals. So we like a phased approach. Given some of the challenges that we spoke of, we like to walk before we run. But it's all about, the path to chemical and the safe path to chemical so that we can deliver. These are real players, real companies. Frontier Lithium has never been just a story to make a 2 or 3 time multiple on a small investment. This company is built on the fundamentals of a great asset, a great jurisdiction whereby billions of dollars are being invested right now, and we're looked upon to deliver. So those are the conversations we're having when we think about partners. What's important when you see an opportunity such as this, we're very strong on the mining side at Frontier Lithium. We've developed and attracted expertise for downstream chemical expertise in the company with close consulting groups with relevant Asian experience. There's very few companies in the West in particular that have the abilities that we have in-house. So when we think about a partner, we think about lessening dilution to shareholders. We think about a partner that opens doors and allows the company various opportunities, whether short-term or long-term, around sales and moving product, to provide the ultimate flexibility to continue to de-risk and advance the project, again, to deliver ultimately the chemicals as close to home for manufacturers. Frontier Lithium is about keeping the whip. And this asset is controlled by North Americans. We'd like to see that continue and try and keep that wealth proposition as close to home as possible. And that's always been an objective and a mission for the company and our jurisdiction. When you think about what governments and Ontario in particular is doing, it's about building an ecosystem. It's about firstly attracting the experience, developing the market. But what's really critical is that we supply that ecosystem from our jurisdiction. So we were architects of the critical mineral strategy in the province, and knowing that at the right time, all roads will lead to Frontier Lithium in order to fulfill the objective of closing the loop and showing from farm to table or spodumene mine to electric vehicle produced in the province. So this is a vehicle by design. And when you think of the investment proposition at Frontier Lithium from that lens, what's important is a partner that would allow the existing shareholders to maintain a controlling position over the asset in line with Indigenous partners, government, OEMs currently under construction in the province, and limit dilution, show additional path to cash to build both phases of the project, and maximize flexibility so that we can continue to de-risk and deliver with certainty. So those are the conversations, if I can frame it that way, that we're having. We have a preference for partnership before offtake agreements here. So that's the type of sequencing that's taking place right now at the company.
So that's the sequencing for you as a strategic North American lithium supplier. But I want to come back to that phrase I used earlier, which is first mover advantage. There are so many new lithium pegmatite stories on the exchange, out there in the marketplace. We're seeing gold companies, nickel companies, you name it, copper companies wanting to become lithium pegmatite stories. How important is the first mover advantage and the advanced stage that you're at to you and in terms of your chance of winning and crossing the line first in North America?
Yeah, it's very important. There's a lot of stories. The reality is, we have a saying that's at Frontier that's the mines build chemical plants. Chemical plants, and the idea of delivering chemicals to the Teslas of the world. It's a great dream to have, but it's got to be based on rock solid foundation. In this industry, of course, being world-class resource, and the ability to, discovery right through to delivering a product takes years. In North America, you'll see up to 15 years to be able to deliver a mine to market. So to your earlier points, yeah, there's difficult times right now. We like difficult times at Frontier. We like that it brings focus to all stakeholders, from the market, investment community, to manufacturers requiring product, to governments assessing, where public support should take place. And it's those times that we continue to rise up and differentiate. And as the market is learning, and will learn again this next step, the reality is it's really difficult to find anchor tier one resources of high grade scale in great jurisdictions with relevant experience and proximate industry for sales. And that is the opportunity that exists here at Frontier. We have laid the foundation, and we are now advancing into definitive feasibility to deliver product and ultimately support the ecosystem here in the Great Lakes region. So that is what is coming through. We have many milestones that we'll be hitting in the coming months and the coming year. So we're really excited to show one of the few opportunities globally of a junior company with a world-class resource at this level right now that will deliver in the future and create a massive wealth proposition and opportunity for those with the foresight to recognize a great asset and the potential to truly build wealth with those shareholders here and the stakeholders surrounding the company right now. So this is a black sheep, and it always has been, but to date we've delivered, and we will continue to deliver. And this proposition at Frontier is also about, overcoming challenges in Northern Ontario surrounding Ring of Fire, whereby we've heard about a great, huge project and opportunity, but the reality is nothing's happened in 25 years. That's an important point, and one that the government of Ontario sees very clearly. We have an endowment of great minerals in the north, and we need them, and we need to access them. And for generations, I've heard, coming from a strong mining family, of the days of just mining and shipping it. So when we think about, the transition and the opportunity that's ahead of us, as Northerners, as people in the extractive industry, it's our duty and it's our responsibility to do things right. So we're so blessed to have found such a tremendous resource so that we can align ourselves with a movement globally, and that is to decarbonize. That is to do things right with Indigenous partners, with government and stakeholders, so that we can deliver and make our mark while creating huge value for shareholders and stakeholders in the ecosystem that's being funded and driven by government and industry. So we're really excited, and we're really excited with the next steps now that we've got such a strong pre-feasibility and stepping into final definitive feasibility stage.